And welcome to the weekly episode here at Streetwise, where myself, Isaac Jonas, your co-host, with my trusted money coach, Blooming Omoren, we talk about what's going on in the stock market, particularly in the US, and also broadly what's happening in the world of finance. Please help me welcome my good friend, Coach Blooming. Welcome, my friend.
Thank you, buddy. Happy 4th of July.
Yeah, things have been crazy. And today, in particular, we are just going to talk about what happened in the market, and I'm going to allow my friend to kind of like just summarize what has been happening in the stock market, and then we will kind of like have a conversation around that in terms of what we think, what we see as opportunities and potential risks in the market. My friend, can you summarize what has been happening in the market? I know you do the 90-minute pitch where you summarize what's happening in the stock market, particularly the US. Please go ahead.
Yeah, so this past week again has been amazing. All the three major indices has been up. If we look from the April lows when the market went gaga about the Liberation Day and just looking from May, June, and this is July, I was saying that literally all the major indices, the Nasdaq, the S&P 500, and the Dow has been up. And even apart from that, a lot of IPOs, we saw Seiko, um, major IPOs has been going on, and the market has been reacting positively to that. We're seeing Nvidia literally becoming the most valuable company in the stock market. It went as high as I think $3.8 trillion, if I'm not mistaken. So it's nearing the $4 trillion benchmark. So again, the market has been reacting positively to this despite the geopolitical tension and also the lot of the whole tariff conversation, at least that has been easing out already. So again, it's been really rewarding for those that have been buying during the April lows, and I just think that this is just the beginning. I'm still very bullish for the second half of the year, and I hope that people will still participate in the market. Again, whatever we're saying here is not investment or financial advice. These are just two friends talking about the market. So,
Fantastic. You aptly summarized it because if I look at Nvidia, it closed this Thursday at $159.34. And if I think of it in April lows, it went as low as I think $94. So what this means is like if you bought in at that point, you could be up big time. The S&P 500, which broadly captures the 500 companies that are publicly listed in the US stock market, is now up 7% as of Friday, the 3rd of July. Now, this is a very interesting scenario. And now, what do you see as the risks in the market and the opportunities? For me, I saw the job market, it came out very strongly yesterday. And I think also the market rallied in response to that. And what that means as an economist is that probably the Fed is not going, is there won't be need to rush to cut the rates, as you know, the US economy is very strong and robust, and therefore it's going to wither that storm. The key thing that we have been reiterating in this market and in this investing journey is that as long as you invest in wonderful companies that have strong fundamentals, growing earnings, and particularly I like to look at the price earning growth, right? And also free cash flows and those strong fundamentals. And if getting at a very good price when there's a discounted, like situation that can cause a discount, like the liberation day, the tariffs, then that's a good way to get in. Those events, they are very good. So congratulations to the bulls, to those who were buying, and I'm sure my friend here, you were buying. A comment on that, my friend.
yeah, so again, it's been rewarding for the past 2, 3 months since the market has been recovering. And it just points back to the to the very point of DCA, meaning dollar cost averaging. There is never going to be a perfect time to get into the market. even though we're still saying that, oh, the market has already rebounded from the April lows, some people might still stay on the sideline thinking that, oh, it's already high. I'm going to wait for this to pull back. Yes, I mean, we can get one or two corrections here and there, but the most important thing is to be a participant in the market just this year over time. I started a challenge just last week where I started buying $100 worth of Bitcoin. I want to do that for Bitcoin. I'm going to do that for Ethereum. Again, just once in a month, just to show that there is no point in really trying to time the market. The more you can just participate in the market and buy quality companies over time, we are going to be handsomely rewarded. Do I see any risks in this? The risk is really not educating oneself about what is going on in the market. We saw when Circle IPO'd about 2, 3 weeks ago, this thing went as high as one, no, three, almost $300. The
Yes,
last time
it
I
it
checked,
went
it was
as
below
far, yeah.
200, below 200 already. So people that got in at 295, again, they've had a major haircut already in the market. So it just goes back to we need to understand what we're doing in the market. There was one that just IPO. No, it's not really that this actually IPO, the Ethereum Treasury proxy that Tom Lee just became the chairman of. Just within a week, this thing has gone up by 3,000%. That's BMNR. And this has gone up 3,000% already, and some people were still piling at the all-time highs. But again, I'm not saying that this is not a good quality stock. I'm just saying that the market is so excited. And again, a lot of people are going to make money, but some people are still going to lose money. Just know what you're doing and you're going to be fine, provided you stay long term and you invest in quality companies. So, yes.
That's wonderful, and people always get the haircut. And I am a little bit like, for me, curious, like, why do people like want to get in when stocks are, at the top? One thing that I've learned from my experience now is that I like to follow what people like Warren Buffett do. It's like, number one, once you see a stock hitting an all-time high, and if you hear any news about that stock and you are not already in that stock, it's done. The market is going to fully price it. It's called, I think, the perfect hypothesis, the perfect market hypothesis, because at any given time there are short sellers, people who want to go long, they are there to make money. So each time they see an opportunity, they move very fast. Sometimes computers, algorithms, they really, high frequency computers, they really like scan for those opportunities. So my investing strategy right now is, and again, this is not investment advice, as we have always said, is I'm looking for particularly undervalued companies. They are there, individual companies. There are some sectors that are undervalued, and there are some stocks that are, that have gone to hit their all-time lows, right? But it's not necessarily because just a stock has hit the all-time low that you should jump in. That's where then now people like Blooming and I, we can coach you and teach you what are the things that you can look at, not as investment advice because we are not licensed advisors, but just to teach you how we are doing it, right? So that's another approach to say, look, what are the undervalued sectors? What are the undervalued stocks? My strategy, I was talking to my mentor this week, going into this week, is that I'm hoping that the VIX is going to go down even lower. And my strategy is that I am actually going to execute cash secured puts to buy it even lower, because now it's now kind of like going to the historically lower. So I get paid when I open cash secured puts and I choose a strike price which is even lower. I get paid, which even lowers my cost basis, and I repeat the process each time there's any news that can potentially cause the equities market to spike up. Then I cash out. If it goes down and I'm assigned, I get the shares at a much lower average basis. But again, this is not investment advice, and I tend not to like to be buying stocks when they are all-time highs. For me, that's kind of like, look, if I look at the S&P, the Dow Jones, the Nasdaq, when they're hitting all-time highs, it's for me, it's time for me to actually hold keep on, holding the stocks that I have, and, you know, sometimes even take some money off the table and wait on a bit of it and have a bit of cash, get into undervalued, or wait for a pullback and then do some dollar cost averaging. So what are you doing in your investment? Did you manage to buy that stock that you wanted to buy? I think more like the treasury, kind of like the one that Tom Lee and his team started.
So no, so I'm not in the BMNR stock. No, I'm not because that's an Ethereum play. But I think in subsequent videos or even podcasts, I might lean more towards buying the underlying security itself, which is Ethereum, because again, I play both in stocks and in crypto. The other one that I said I was going to be trading was the Meta Planet. It has not reached my entry price, which is within $8 to $10, but I've already set limit orders for it to buy. But again, apart from that, this is more of a trading stock. It can go to zero. It could go to 100. It could, I don't know, whatever is going to happen, but it's not a sizable portion of my investment portfolio. It's not. But that's just something that it's a risk that I'm willing to take. Do I have my core portfolio? Yes, I do, and I don't touch those ones. The only thing that I do on those ones, maybe I sell covered calls on those. But even with that, when I sell those covered calls, I'm very, very, very conservative. The probability of it being worthless is literally 92, 95% because again, I don't want to end up losing the shares and I'll just take a little premium for that. So that's one of the strategies that I'm taking, meaning that I separate my long-term investment strategy from the trading strategy. Trading is just more of like if I lose this money, it's not going to wreck my portfolio. And even the trading, it's not that I'm trading in and out. I'm just saying that this is a speculative stock and I want to get it at this particular price and my goal is to exit maybe when a 5x's or a 10x's, but that is just more of a medium and short-term strategy. So that's what I've been doing in the market, just selling covered calls, taking that some premium on that. But again, for the trading, I let it get into my buy zone. If it doesn't reach that, I'm not going to buy because again, I'm willing to wait and I'm hoping that the market will give me the opportunity to get into Metaplanet within $8 to $10. But hey, that is just me personally. So that's what I've been doing in the market so far. And with the DCA, $100 into Bitcoin, $100, I'm going to do one for $100 into Ethereum because Ethereum is going to be a major play. We saw stablecoin cycle. Again, we saw how that went up, and this is just the beginning. Bitcoin, Ethereum, I honestly think that that should be in everyone's portfolio, but I could be totally wrong. That's what I'm doing personally. I invest in both the stocks and also in the crypto market because I strongly believe that crypto is becoming mainstay and Bitcoin and Ethereum, those are two major things that we should have in our portfolio long term. So over to you, Coach.
Thank you. And we are just going to wrap up because we want to keep this short and sweet. I am very interested in the fact that, sometimes I keep on, sharing this with folks and they say, oh, how do you spare some money to invest and stuff like that? I think what I've learned is that I think investing, I mean, in life, you have to make choices, right? And that's the, core tenet of economics, trade-off. Either you can get, let's say if you have $10, you can spend it now or save it, invest it for future. That is the two gap model. But if you look at it, you can either get coffee or buy some beers or invest it, right? So you make a choice. But what I've seen is if you want to build wealth, one thing that for sure a lot of rich people have done is they invest in assets that, you know, grow in net worth. And also even you were talking about free, cash flows from, cash secured puts, uh, and also covered calls. That's something that is very, very important to also make sure that you have different, income streams. Some people do real estate. You can also do that through, the stock market. So Blooming and I, that's what we spend most of our time doing. So make sure you subscribe to this channel, you reach out, you check out my friend's YouTube channel. She's always creating content on social media, even to the extent that every trading day she summarizes what's going on in the market. I do content creation. I know what it takes. It's a lot of work. But again, she's doing it for you. What you just have to do is to spare 90 seconds of your time and just learn. You don't have to agree with everything that she says, but at least you can learn something or even share what you think. So, with that, I would like to give my friend an opportunity to give some closing remarks. Until next time, we'll see you in the next episode. Make sure you subscribe and thank you for tuning in. My friend, please feel free to give your closing remarks.
Yes, so again, this is the beginning of July, and I strongly believe that we're going to end the year on a very high note. Can we still have some corrections along the line? Yes, we could. But the way we build wealth is not just by working alone. Our money needs to work for us by investing in asset. Just like my friend just said, the way we get rich is by investing in asset. And the easiest way to even grow our wealth over time is by using the stock market and also crypto. This is accessible to anybody, provided you have the access to the internet and you have a smartphone or laptop. You can participate in the market, but as we always say, it's important to educate oneself first, and that is what Isaac and I we just do. We just educate people about the market. Again, the education is the first step, not just buying a stock or buying crypto. No, the first step is to really to educate yourself, and if this is something that you're interested, again, we have all our channels is listed in the description area below. Just reach out to us. This is what we do, but again, participate in the market, dollar cost average over time, remove the emotions from investing by dollar cost averaging over time, and have a long-term investment horizon, at least 5 years. That's my own strategy, and until then, I will see you in the next episode.
And actually, in conclusion, I just wanted to mention that my friend and I, we are always creating content. I have a course where we teach you how to invest, from the basics and how to buy shares, and it's on my website. I know my friend here as well. She also has a code that she's, recruiting for those people who are serious. I think the most important thing is serious people who want to build wealth, and we teach you and we take you behind the scenes in terms of how we are managing our respective portfolios. So if you want to tune in, make sure you check out our respective website. For me, it's www.twiceeconomics.com and bloomingumorin.com. So see you in the next episode. Thank you so much for tuning in again.